I like the story. I like the relative valuation.
Maybe you're buying a little bit of what another committee member is selling because we do have somebody who's taking profits in some of the biggest names in this market. Bill Baruch joins us now via Skype to talk about this. So you've trimmed, thank you for coming on today, by the way. You've trimmed Apple, as I mentioned. You trimmed Amazon. That's an interesting one, too. Synopsys and Adobe. Talk to me.
Yeah, starting with Apple, you know, listen, it's still a large position. All of these are still really in our top five. And this is prudent portfolio management. Apple struggled to get out above 190 from a technical basis. And so I want to step back a little bit here ahead of CPI and just take, again, a more of a prudent path. Looking at Amazon, great response to earnings. The stock performed very well. It is still our #1 holding. We trimmed both of these by about 10%. Just, again, a little prudent portfolio management. But going down the line here to Synopsys, Cadence Design Systems reported after the bell yesterday, and they both are leaders in electronic design automation. So we're just taking a little bit of a cautious approach. Last time Cadence announced earnings in October, they didn't really perform very well after that, though they responded and traded better. We're just kind of seeing that today. Their guidance was soft, and Synopsys is down in sympathy to that. Looking down the road, Adobe, still a big position of ours. They don't report until the middle of March. But I still love the name, and I think there's about $1 billion in revenue from the creative cloud, AI, the AI generative cloud that they have that could still be coming in there that's not counted. I still love the name, but just trimming things here a little bit.
You're not making any sort of, I know you call it, you know, quote unquote, prudent portfolio management, where others might say you're making a broader statement about, you know, queasiness, if you will, with what some of these stocks have done. You had trimmed some of the other mega caps in the past, and now you're moving on to the Amazons and the Apples of the world, too. Am I wrong when someone like Jonathan Krinsky is talking about conviction on the downside remains super high momentum areas, such as semi-software and mega tech in general?
And that's a really good point. And so I think that you can't manage a portfolio all at once. And I think we've had a really great move. It's nice to monetize it. But when we look to NVIDIA's earnings, February 21st, I believe it is, you know, there is some seasonality that aligns with some weakness in the market in the back half of February. Now, I think everything is really being priced in here, right now. NVIDIA, you know, I fear that when we go into earnings, we could see the market sort of level out for a bit and consolidate. Maybe that's already started here after today's CPI report. So that's really what I'm preparing for, is sort of a leveling out trade that could last over the next couple of months, raising a bit of cash to give me some look for opportunities down the road, look for things that may have sold off already. Talked about Tesla last week. So I'm still out there looking for things to put this money in cash, too.
I'm glad you remind us of the Tesla ad, too, as well. Thanks for coming on, Bill Baruch. I appreciate you joining us. Look, the other thing to consider, which we really haven't considered all that much when it relates to these stocks, what if the AI hype isn't all that it's cracked up to be?